Welcome to the Swing Trading with Cycles channel. It's January 12th, 2023. We're going to cover natural gas today. And I will say it is the day of the CPI release. Always a big day for the markets as we're in this hiking cycle. And the market is reacting bullishly. The dollar has rolled over. We know on this channel that the dollar is in long-term decline. It has been since September when it printed a swing high. If you're new to this channel, I'll give you the short version. We focus on trend analysis. The charts allow us to do that. The charts are a visual cue that allows us to perform trend analysis, right? We're not predicting the future, right? In December, when we started talking about natural gas, we were up here in this little consolidation period. We didn't know it was going to break to the downside. You couldn't know that. Now, the fact that this was a lower high to this increased the probability that it would break to the downside. But we had to wait and let that structure break down. And then we got this cascade lower. And then finally are trying to bottom in this 340, 350 area. Our expectation was always in the 360 area, 350 and a half. And so big picture, this is our daily chart. And as always, there will be a pinned comment with background info for you. And you should definitely take a look at the broader market update. Again, the broader markets are trying to rally, which you would imagine should be supportive for natural gas as a whole, right? And so the thinking is so there was a point where this looked like it was our daily cycle low here. That was day 21. We had a swing, and that's because we had a swing low. That's what this red line is, right? Once we were above that level, we had a swing low. This was our swing low, and then you can see it pulled back pretty hard. And then the next day it came in. The next day we made a lower low, right? So this actually became a swing high. So we went from swing low to swing high in a span of 2 days. So the rally petered out. And then we actually went on to make a lower low, a slight lower low, right? And then we rallied back above the swing high level. So the swing high level, to be clear, is 3.839, right? And so we're now back below that. We're at 3.803, right? So we're like, what is that, 33 ticks below that level. You can see this wick building. And so as I said in the video yesterday, I'll just kind of draw a quick box. This is just a big consolidation box, right? Like this whole thing. That's what this structure is starting to resolve as. Like this as a big consolidation box. And what I'll say is, like that, why that's pretty clear is that, I mean, look at this cascade lower, right? Like I'll just draw this, like this line. It's like we essentially went down in a straight line. And so now we're consolidating a little bit. Now, consolidation can continue the move that it started, right? Like if you're consolidating after a move lower, you could just be consolidating for the next move lower, or it could be consolidating for a reversal. Given where we are, like how long this decline has lasted, the odds favor that we're consolidating for a reversal. And in fact, this is a new swing low level that we have. Let's just be really clear here, folks. The new bar is lower, right? Because this candle made a lower low than this one. And so we're now concerned with the high from this candle, not this candle. Although you do want to get above this, and really you want to get above this. This is going to become a sort of a supply zone. But just to be really clear, the new swing low level now is 3.777, right? So 3.777. And we're above that right now, right? So just like, and what we're really, but again, like if you kind of think about this whole thing as a consolidation box, we're going to want to get out of that. And we're going to look at the lower time frames. The 8-hour chart, I think, is very revealing to kind of show what's happening. And I tweeted yesterday how there was an 8-hour candle that was trying to turn into a bullish outside candle. That's what kind of created this swing low here. And it's just important to see how those things kind of form in real time. And if you think about the weekly, this action is making the weekly chart oscillate between red and green, right? It's trying to go from red to green. That's always so important to understand. You look at a candle and you say, what was the opening price? Because if it's above the opening price, it's green, which means it's moving higher. If it's below the opening price, it's red. And so this candle opened at $4. So it opened at 3.810. And so we're now about 5 ticks below that. And so we're kind of oscillating between red and green. And ultimately, just to kind of get ahead of it, just to think about what does next week look like? And I realize it's Thursday, so we do still have one full trading day left. Although, and next week is a short week because we have Martin Luther King Day. We're gonna be closed on Monday. This is gonna, like, next week is gonna open as an inside week. We know that because it's very unlikely that we're gonna make a new high. Well, so what's the high here? $4, 4.128, and the low is that low that we talked about, 3.422. Very unlikely that we're gonna make we're gonna kind of make a new high or a new low. More likely that we stay within this range here to close out the week by tomorrow. And then you can expect then that the next week's candle is going to be an inside candle. And then we're going to need to see, can it get above that range? Can it get above that level, that 4.128, to start an uptrend on the weekly chart? And that's how we'll know that this is not only a daily cycle low that we have on day 24, but it's also potentially a weekly cycle low, which means the rally may last for a little bit longer. Now, to be fair, this little rally on the weekly level only lasted 4 weeks. So it could be that we get a really short weekly rally. It doesn't mean that we're going to get a bullish long rally like this one that was 23 weeks, right? Or this one that was 29 weeks. I mean, man, what a nice rally. But at some point we will get one of these, and by getting in at a swing low, you're increasing your odds that you're going to be able to ride that, right? And so again, just look at that level. That's just going to be really important. Next week, there's going to be trappy action, I suspect, because it's just going to be an inside week to start until we make a move above this level or below this level to start a downtrend or to resume the downtrend. Again, because of this huge move lower on the weekly, it's not shocking that we would get a move higher, right? Even if it's going to be bearish, like, right, even if it's going to do something like that and then that and then that, right? You're still, like, price generally doesn't just drop off a cliff without retracing at least some of the move. And we've obviously started retracing some of it already. That's what this lower wick is. And on the monthly chart, we talked about how this, I'll get rid of the lines. That can be kind of annoying. We talked about how this, between these two lines was kind of no man's land. Now look at that upper wick or that lower wick, right? That's what we talked about we would see if we saw a rally. That's that thing that, as we talk about, a lower wick is just a rally on a lower time frame. And so have we been saved from falling into this pit of abyss? Not necessarily. It's a little early to tell. We're going to need to see more price action. Again, we could end up, like, just because you have a cycle low doesn't mean the next cycle is going to be bullish, right? It could be a bearish cycle that's left translated that has a very early high. And so what we're going to want to also watch for this month is that same concept as the weekly, right? This month opened at 4.393, right? And so can we get above 4.393 before the end of the month and turn this candle from red to green? That's what we're going to have to see, right? Like that becomes a very clear sort of signpost, if one is long, as a place where maybe we want to lighten up. Maybe that's where we start to see a little bit of resistance. And then, of course, we like if you're to have a long-term bottom, right, you'd need to then see the February candle do something like that, right? And then obviously, like March, you have to start recovering those gains, essentially start making more higher and higher swing lows along the way. So that's the kind of the big picture, as I said. And again, we took out this cluster of lows, right? You can see that's what this wick did. And so that's the bullish part of it, right? They're like, okay, maybe we don't need to come down here and, our business here is finished. We're going to have to see. And it's month 31 of this longer cycle, which topped out on month 26. So again, these cycles work on all the time frames, daily, monthly, and that's like, this is a more long-term view. So let's switch over to the intraday chart, and we'll also look at UNG, Boyle, and KOLD. And so again, I talked about the 8-hour level. So let's look at that, right? So this is the candle that I referred to yesterday, right? I said this candle is trying to become a bullish outside candle, and what that would mean is that it would, right, like, because this candle made a low below, like this candle I'm talking about here. Just make sure we can all see it, right? This candle made a lower low below this candle. And so at one point, this candle was very red, right? We know that because it was all the way down here, right? The body of the candle was all the way down here. It was red. We were making a lower low below this low, and then it flipped green. And the expectation was, okay, the way this pattern usually plays out is that after you make the lower low, you then go on to make a higher high, right? Because you took out that low, right? That's this wick, you left it behind, and then the expectation is you're going to take out this high. The catch is the move doesn't always happen on the same candle, and what I mean by that is sometimes it takes a candle or two to complete the pattern, if you will. And so what happened is this candle ran out of time. This is an 8-hour candle, so it 8 hours passed, the candle closed, and this is how it looks. We know that now. The next candle did nothing. This isn't called an inside candle. It didn't make a new high compared to this candle, and it didn't make a new low. It just sat there. And then we got the move on the next 8-hour candle. And what did it do? It completed the move that this candle started by making a higher high above this candle. And so the way that you can kind of think about that is these three candles, if you think about them as one compound candle, are a bullish outside candle of these three candles, right? Like if you combine these three candles into one 3-hour candle and these three candles into one 3-hour candle, this 3-hour candle made a lower low than this one and then completed the move. That's a really powerful setup that you want to look for. And again, remember that it doesn't always complete on the candle itself, right? And again, multiple time frame analysis. This kind of pattern shows up on all time frames, especially when it shows up on like a monthly chart. That's beautiful. That's when you're set up for a move that can last a few weeks. It's a nice little trade. And imagine you can have the same pattern on even like a quarterly chart, for instance. So the current 8-hour candle closes in 3 hours. So basically when this trading day closes. And so far it has made a new high. So it made a slight new high. And so it started that pattern, right? Like this one where, okay, it made a new high and then it went red, right? So like this is an example of a bearish outside candle, a compound bearish outside candle. We made a new high. This candle was green at one point, higher than this one, looking good, follow through, and then it went red. It ran out of time, it closed, but then the following candle closed the deal for it. So again, so if you combine this candle and this candle to this candle and this candle, this is a bullish outside candle of that. And then we even got more downside follow through off of that. But then consolidation, a big move lower, took out a lot of stops. And again, our own sort of bullish outside candle. So a lot of the bulls and the bears are really wrestling here, really fighting. And if you understand price action, you don't have to worry about narratives or market makers trying to fake you out. Just chill, follow price. And so I'll say this is now consolidating. We know that because of this lower wick, right? And let's see what is happening on the hourly chart that is making that the case. Let's make this auto. Right, so you can see we had this little move up and we've been really consolidating for the last like 4 hours. Notice price has been making these lows and then it kind of gets bought up at these lower wicks. So again, the battle kind of continues. And these upper wicks are definitely not auspicious. I mean, you can see them on the daily chart, right? Like the upper wicks, that's not helpful, right? It just tells you price is not following through, right? You get a bullish move, but then it does not follow through. You end up with a pullback instead. All that said, this is indicative of a bottoming process, which is obviously bullish. Okay, so let's look at Boyle. What's Boyle doing? So Boyle has a swing low in place as well. This is a daily chart. But look at that thing. It's red. These things are hard to trade, right? It's a wild one. So it is above the high from this candle, but it's red. So that kind of sucks. Doesn't make sense to look at the 8-hour for these because it's not a futures. Like it doesn't trade. Each 8-hour candle is basically a daily candle. That is. And if you can see on the hourly chart, we're trying to hold a line here. So we really want to hold a low at 1197 here. I mean, this is essentially a little bull flag, right? And obviously needs to get through that high at 1303 to potentially see some higher ground. But again, you want to watch what the natural gas itself is doing to kind of understand overall. What does the weekly look like? Is the weekly, yeah. So it's going to be the same kind of idea. This weekly chart is almost certainly going to set Boyle up for inside weekly candle next week. Let's just draw that, just the visual so you can kind of see what the heck I'm talking about, right? something like that, right? It's going to open in, most likely. That's why it's a wild trader, so it could easily open up. It could easily gap open like above this range or below this range. But right now, as it stands, that range is a high of 1434 and a low of 1022. So a good 40%, like between those two, but within that range. So a pretty ginormous range, although obviously this thing moves quite a bit. So that's the level for Boyle that you're gonna want to know about, and UNG is going to be exactly the same pattern, just different levels. And let's see what those levels are. So for UNG, the weekly high is 1313 and the low is 1089. So anything inside of that range is really just consolidation on the weekly level, which means you can certainly have a trending move on like the hourly chart, for instance, but until you get out of that range on the weekly, you're not really going anywhere. And also, let's look at the monthly levels for Boyle. Important to know. So Boyle, and I think I mentioned this in the other video, $15.16. That's the opening price for the monthly candle. And so you would think any rally would at least get us back there, or at least in that neighborhood. So that's decent upside. You're down here around 12, less than 12 and a half. If you can get to 15, and maybe it doesn't get all the way to 15. What is it? 73. Wait, what is that? 15.73. Maybe that's just it, right? It makes a lower high. It gets to $15. That's still nice upside here. You can find a good risk reward trade. And what is that level for UNG on the monthly chart? So for UNG, the opening price is $12.81. So that's good to know about. KOLD is the inverse, so that's going to be doing badly. And for KOLD, it's the opposite, right? We're going to be looking for the monthly chart to go red. It's green now. And that chart opened, that candle opened at 31.45. So we're here at 34.62. So you imagine we're going to go at least below 31.45 to kind of complete that pattern. The other thing that we'll kind of look at, just to kind of give us a sense, let's just look at just a quick gut check of how big the rallies have been, right? So we had this little rally, 68%, this little rally, 67%, this little rally, 57%, right? From Pico bottom to where we've done a little 28% rally so far. So, and there's no rule that says it has to rally as much as it did previously. It's just to kind of give you an idea. That was a big one, 178%. That's 69%. This little tiny feeble rally that petered out, that was about 27%. So that's ominous, because that's right around where we are at now. That's 28%. So it does put you in an ugly spot where this could be just the right level, so where the rally is going to roll over. Or it could be just the start of like a 60-70% rally, even if it's going to be a bearish cycle. But that's what stops are for, right? Like you can easily place a stop so that it's going to preserve your downside if you sort of print a swing low, for instance, on the hourly, or excuse me, a swing high on the hourly chart, for instance. So that's a helpful kind of guidepost. Let's look at UNG. And this was a daily chart. This was looking at your little daily rallies. What has UNG done? Ballpark here. So that was a 32% rally. That's a little 34% rally. That's a really feeble one that led to a lower low. That's 13%. That led to some chop. That's 13%. That's 33%. So it just gives you a gauge of what kinds of things has price done. That's 72%. So from Pico bottom to where we're at now is about 15%. So again, puts you in that awkward spot where it may be that we just completed the rally that we're going to have, or we still have a good amount of percentage points to gain. As always, natural gas never makes it easy. So we're going to leave it at that. I'll definitely continue to provide updates on Twitter. Again, definitely make sure that you're following there if you're not already and you want to get sort of more real-time updates, because I obviously am not going to be able to make as many videos as I'm able to tweet if something big happens. But we'll leave it at that. Thanks for watching today.